All right. Hey, everyone. Mark here, Mark Pre-Markets. Thank you for joining me for another Bitcoin video analysis session. It looks like TradingView is working this week. How nice. All right. So I am simulcasting. If you're new to the stream, welcome. Let me explain to you how this is going to work. So first, I'm going to go over the economic calendar very briefly. Right. We got a heavy week this week. Then I'm going to talk about the Bitcoin chart and basically the title of today's stream, which is Overlooking This Wave Count, because we're going to talk a little bit about the wave counts today. And there's a reason why I bring up wave counts around this time. So we're going to talk about that. And then we'll talk a little bit about the trade scanner. It called Matic or Polygon as trade of the week this week. It just came out, like yesterday in the evening or something like that, or very early today. So that's we can talk about that as well and see if that trade makes sense, because it is possible to use our own context skills to better evaluate the risk of the trades that the trade scanner calls. All right, so with all that, let's get started. Okay, so let me just pull this up here real quick. And this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, so TradingView people, if you could see me, you can say hello. By the way, if you want to also share what city or what country you are from, there's Stian over there. If you want to share what city or what country you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey, okay? We've been having some unusual weather here. It's been raining a lot. It's like springtime when really it should be snow, but I'm not complaining. Anyway, so let's get into this, shall we? First thing I want to talk about is the economic calendar. And let me say my hellos real quick. Hey, Savi, good to see you. Or Savel, all right. Armand, good to see you. Stian, of course, my regulars. All right, over there on TradingView. By the way, on TradingView, if you can't see me, make sure to refresh the browser. That usually solves the problem, okay? So there's always someone that's going to pop into the chat saying, I can't see him. Just tell them to refresh the browser. All right, now, real quick, if you look at the links in the description on the YouTube here, and if you look at my signature over on TradingView, you'll notice a couple of things. I am running a special on our monthly memberships this week. An email is actually going to go out tomorrow. Okay, so if you're on the Trade of the Week email list, you'll get the email. If you're not, you can join the link. There's a link in the description to join Trade of the Week. If you're on that list, you'll get the email. But if you don't want to wait, there's a link that on YouTube, the very top link says save 50%. Let me explain that real quick so that I don't get messages afterward saying that it wasn't clear. So save 50% your first month means that when you subscribe as a monthly subscriber, because we have quarterly and yearly memberships, if you subscribe as a monthly subscriber, you save 50% off your first month. So that should equate to something like $29.50, okay, your first month. Now, I emphasize first month because if you stay as a member, the second month, it's going to automatically bill your account for the regular price, which is $59 a month, okay? So it's first month only. So please don't subscribe and then send me a message and say, I thought it was for the whole membership. No, it's 50% savings your first month. There's a link in the description if you want to get started with that early. I'm only making that available this week. And if you want to wait for the email, you can wait for the email. That link takes you to a page with all the information and the coupon code. It's all on the page. Okay, thank you again, Steen, for helping me out with that, of course. By the way, there's also other links for Bybit and for MEXC. If you're looking for a new exchange or you want to try something new in that area, consider signing up and fund an account and place trades using one of those links. Those are affiliate links. And Stian gets a small cut of your commission when you place a trade. Now, how this is helpful is it helps to support the community, because who do you think does all the technical work for the community? It's Stian. So all these great things that we see, the trade scanner, the refinements of the trade scanner, the record of the trade scanner, the database that connects all that to the website. Who do you think does all that work? I don't. So it really helps a long way. It helps them out a lot to help them support the community further. So please consider that. All right. And that's that. All right, cool. So, and one other thing I want to mention, The trade scanner has been doing pretty well with the coins. Now, the coupon is good for the cryptocurrency trade scanner. We also have Forex and stocks. You can actually use that coupon code for the other markets if you're interested in those. But I'm promoting the cryptocurrency one because this environment has been very good for the coins, and the trade scanner has been doing well in this environment. And the record has not been as great with the Forex and the stocks. I'm just being honest, because the environment hasn't been as clear, okay, in terms of momentum. Understand the trade scanner looks for momentum, and it looks for continuations in momentum. And it's important to have something like that working with you in this environment because, man, let me tell you, this is a hard game. And most of the time you are up against algos and you don't realize it. And in order to compete effectively, you need some type of tool that's going to at least put you on an automated front, right? So anyway, just wanted to mention that. And by the way, if it's too expensive for you, like $59 or even saving 50% of that, right? And you're only paying $29, if that's too expensive for you, I understand. In some countries, the dollar is very strong. So, it may, $29 a month can even be expensive, right? If that's the case, I highly suggest you do not trade, okay? I recommend that you invest instead because you're better off that way. You need money to trade, especially to trade effectively. All these frauds that push all these dreams on you, if you believe that nonsense, you're just going to get fleeced faster than everyone else. All right, no more rants. Let's get into the economic calendar. All right, because I know people are like, when's this guy going to begin this session here? All right, let's begin now. So economic calendar, and then I'll make this chart bigger, okay? By the way, I wrote an article in my TradingView account yesterday, and I hinted at this in my article, what I'm going to review today. So hopefully you read that article over on TradingView. If you haven't, check it out. All right, it's not that long. Now, first, economic calendar. We have a few things this week that are worth paying attention to. First, we have tomorrow, right? Tomorrow is the 12th of December, Tuesday, the 12th. That's tomorrow, right? So tomorrow we have the CPI report here in the US. I believe that number comes out at 8:30 or at 10:30. Don't quote me on that. I suggest you look up the time that it comes out, but that's a pretty important number. It's an inflationary number, and that can move markets, right? So CPI tomorrow for the US. I believe also the UK has their CPI. Hey, Milad, good to see you. All right. The UK also has their CPI, but that one is not as important. It's the US one that matters, right? So make sure you're aware of that. That's especially important if you're a day trader or if you're involved in one of these markets that can be heavily affected, like the S&P or things like that. So that's Tuesday. Now on Wednesday, we have a whole bunch of things. I believe there's a PPI report coming out, but that one doesn't matter. We have the FOMC meeting here in the US. So interest rate decision on Wednesday. The decision usually comes out at 2 p.m. Eastern time, followed by the press conference at 2:30. That is important because if Chairman Powell hints at anything, it can move markets in a dramatic way, one way or the other. The whole point of this is to mitigate risk, right? So you want to be careful going into that, which means Tuesday afternoon, Tuesday evening, the markets may get very quiet in anticipation of this news, right? This outcome. Now, also on Wednesday, we have, I believe it's what the Swiss National Bank also has their rate announcement. And then on Thursday, I believe it's Thursday, the 13th. No, I'm sorry, Wednesday is the 13th. Thursday, the 14th, it's, who is it? I think it's the Great Britain or the British Pound, Bank of England. They have their rate announcement, followed by the Bank of Japan. And there may be someone else in there too that I'm forgetting, okay? But there are a whole bunch of rate announcements the entire week going into Friday. So keep that in mind, all right? Because again, the FOMC, the US one, the Federal Reserve, that's going to be the most important. But if you trade Forex pairs and you're in some pound crosses or something, or you have a franc position or something, it can be affected by the outcome of the announcement. All right. So just keep that in mind. The market can get funky over the next few days as a result of these rate announcements. All right. So make sure you double check the calendar. TradingView has one. All right. So let's move on here. Okay. So that's the calendar. If I miss something, Let me know. Hey, Sean, good to see you. All right. We got Nicholas from Greece. Good to see you guys. All right. M. All right. Cool. Thanks for stopping by. Andre from Russia. Ah. All right. Weather right now here is 39. What are you like in Siberia? Okay. All right. Yeah. Why not? Why not? Why not? Okay. So let's get into this Bitcoin situation here. Now, in my article that I wrote yesterday on TradingView, all right, let me make my chart bigger. You don't need to see my pretty face while I explain this. There we go. Much better. Actually, I like this one better. Okay. Now, I start talking about wave counts, right? I usually don't mention wave counts. I usually don't emphasize them because usually most of the time they're not as relevant as they are in these situations. Now, when I say these situations, what I'm talking about is whenever we reach what appears to be a cycle high or a cycle low, some kind of major level, that's when I start looking at the wave counts because I want to see where are we. Understand that wave counts they sort of give you a loose roadmap of what to anticipate next. So you can have some sort of loose expectations, right? And what I'm looking for with wave counts, I'm not sitting there trying to connect all these dots and trying to do something complicated, right? What I'm looking for is I want to answer two questions. Are we in a wave 4 or are we in a wave 5? That's really all I want to know. Because if we are in a wave 4, which is what I pretty much outlined in my article, right, yesterday, if we are in a wave 4, which is this little section here, a minor wave 4, or what I like to call a small magnitude wave 4, okay, then it's reasonable to anticipate one more leg higher, which is wave 5. That's what that little squiggle represents. But of course, I drew a question mark next to that wave 5, which, if this structure stayed intact, then this wave 5 would have been the higher probability outcome, right? But after that, once 5 of 5 is complete, this is when we have problems because now a broader corrective move is more likely to follow. So I was anticipating the broader corrective move maybe after the next couple of weeks. Well, we get this surprise today. So let's talk about this surprise. Again, I don't follow news because I know better. And I don't know why we've pulled back 3,500 points. But I am not that surprised because this was all nonsense, first of all. And it's a wave. It was a part of a wave 3. Now, here's the thing. There's a couple of things I want to point out. First, we have not overlapped wave 1 yet. Okay, here, let me draw a line at the wave 1 high. This is the wave 1 high. When I'm talking about these waves, I'm only talking about this structure. I'm not talking about the broad structure on the monthly chart. I'm going to go over that here as well. All right, you're going to want to hear that one because that's really that's the point that I want to make on the whole thing is the monthly count. Right now, we're talking about this little minor structure right here, right? This minor impulse wave, which I was basically suspecting that this little minor wave here was basically like a 5 of a 3, right? So once you get like a 5 of a 3 and then you get like the 5th wave of that, that's usually party over time, right? The party is over. That is usually a warning, like expect a lot less because a correction is around the corner. So what I want to point out here is, for one, we haven't overlapped wave 1, which means as long as we don't overlap that price, which is what? 38,437. So 38.5. As long as we don't overlap 38.5, right? That means this impulse structure is still intact. And this is just a more dramatic minor wave 4. I know it may seem dramatic, 3,500 points, but the structure is still intact. Understand there's a symmetry to these waves, right? That's the whole thing. Emotion expresses itself in symmetrical ways in the market, and that's like the whole premise behind this. Now, again, I don't trade the wave counts because wave counts could also be very inaccurate. Markets are random, and I accept that markets are random first. So I use this as a loose roadmap, and I follow the rules. So as long as this number is not touched, this structure is still intact, which means a wave 5 is still possible at this point. Wave 5, meaning in the next couple of weeks, we test, the high again, which is what? 44.7 is the high. So perhaps we test 45, possibly into the, near 46K, right? That scenario still has a possibility because wave 1 hasn't been overlapped. Does that make sense to you guys? You have to understand the rules of the wave count, right? There are 3 basic rules. And wave 2 can't go beyond the bottom of wave 1. Wave 3 can't be the shortest wave, and wave 4 cannot overlap wave 1, right? So that's the rule we're looking at here, wave 4 and wave 1, that relationship. So again, like I said, if it doesn't overlap and instead we get some type of reversal structure at this nice convenient support level, old resistance, new support at 40K, what a surprise, right? You know that I've had these lines drawn on my chart in advance, right? So we blew through that 40K only to get stuck at 45K, and here we are back at 40K. Not exactly a coincidence, right? So those are the levels that you should be working with rather than getting caught up with emotions or paying attention to fake gurus who say things like, we're just getting started, or altcoin investors are going to make millions, early investors. I can't believe people still actually believe that nonsense. But anyway, so that's my point first, right? This structure is still intact. It's still bullish, but the momentum at this moment is very bearish. So you don't want to step in front of this and be like, oh, he says it's going to go higher, so I'll just buy it. No, this thing may break. And if it breaks, and it breaks 40K and we overlap wave 1, if we do that, then it cancels out the entire structure, right? It cancels out this impulse structure. And what it tells us is basically that this little mini move, see this little blip right there, this little green candle? You see that candle? Let me just highlight that again. See this little candle right here? If we overlap wave 1 and we take it out, that means this little candle is wave 5. That's what that means. And that means this impulse wave is completed there. So where the wave counts are beneficial here is, even though my count may be wrong and this may be 5, I'm still prepared for a pullback. I still have low expectations of potential going forward. So I don't believe we're going to go to 50K or 100K by next month, like a lot of people like to claim, right? The wave count keeps me realistic. That's the whole point, even if my count is wrong. So if we manage to break that 40K and we start overlapping the 38.5, that means this is wave 5. Now, why is that important? Hopefully you guys are following me so far. If you're confused, let me know. Send me a question or something so I can explain that further. But why, especially before I go on to the next part here, which is going to be a little more eye-opening as far as where we're going, because we're going to now take a step back and we're going to take a look at the bigger picture. All right. So if this is the beginning, if this broad move is the initial part, okay, cool. If this broad move, because 3,500 points is certainly significant for one day, right? If this is the initial move of the next corrective wave, then what is the next corrective wave? That's what I want to show you, okay? And that's what I wrote about in my TradingView article, the C wave, okay? So this is a monthly chart, all right? Now, a lot of people are guilty of overlooking this. I sometimes overlook this too, because how often do we look at monthly charts? I don't take trades on monthly charts, right? I'm not going to take a day trade or a swing trade based on a monthly chart. So it's easy to overlook. But in this situation, I took a look at it. I'm like, let's see, where are we on the bigger picture? You could also do this with a condensed weekly chart, but it's just easier to see on a monthly chart. So when we look back here, all right, we can count waves. And if we count starting here, all right, this is the rally going all the way back to like 2019, and we call that wave 1, okay, back there. You see that? And this consolidation right here is wave 2, because it doesn't go below wave 1. Then, of course, we have the dramatic wave 3, right? This gets everyone all excited. Everyone's going to be a billionaire, right? Early investors are going to make trillions of dollars. I'm waiting for that thumbnail. So then we have that, okay? Then we have the first nasty pullback, right, which is wave 4. All right. And then we have this thing here, which is possibly the wave 5. Now, it's tricky with this because this could have been 5 waves complete, and this could be the corrective structure, right? This is the A, this is the B. And the reason why I say that is because it's pretty easy to see 3 waves in here. Corrective structures are usually 3 waves. So it's possible that this is actually the correction of the correction. How do I explain that? Right? This is the A wave, this is the B wave, and this is the first C wave, right? That's possible. But let's just say that this is wave 5. Let's just say that is, right? Because it made the higher high. Let's just say that it is. And this is the first A wave right here, right? A, B, C. Okay. Then we have this thing here, right? And this is the structure. This is the structure that takes us to where we are today. This was a year ago. See that? That's the 15K low a year ago, right? And here we are at the high. But I thought it was just getting started. No, it was just getting started a year ago, right? But you don't know it's just getting started until after the fact. Anyway, so if that's the case, and we have this, weird structure here, meaning we have like a 1, 2, 3, right? This is a wave. This is a wave 1 right here, right? Wave 1. This is a wave 2 right here, right? This is the wave 3. We're looking for a broader wave 4, all right? A broader wave 4. I'm sorry, this is the weekly chart. Wait, watch this. Hold on a second. Let's go to the monthly. Let me show you this. All right? So when I consolidate it like this, that's why I'm like, this looks a little strange. Okay, here we go. Now watch this. Same wave count, right? Same wave count. So we're going to call, like I said in the previous chart, we're going to call this wave 5, right? So this is our first corrective wave, right? The ABC, the first one. This, where we are now, let me make this bigger. This, where we are now, is what? This looks corrective to me. I see 3 legs, A, B, C. So the 5th wave that we're looking at right now completes the C wave. Another interesting thing is if I measure from high to low, okay, and I look at the 50% line and I draw on, I don't have it on the fib tool, but between 382 and 618 is 50%. Look where we are. What a surprise. That's my Seinfeld impression, by the way, in case you're wondering why I talk like that. I love Seinfeld. Anyway, we're at the 50% retracement, okay, which is a pretty significant level. So, I mean, I'm not going to sit here and say that guarantees we're going to pull back. But when I see that and I see, this is a corrective wave, A, B, C. So if this is a B wave, if this entire structure from here to up here is a B wave, then we're looking at the possibility of a C wave. In an extreme situation, the C wave can take us back to here, which is 15K. Now, I'm not saying that this is a forecast. I'm not saying that there's any accuracy to this. I'm just saying that that's a possibility that we should consider. So something like that can take a year to play out, right? To go to a cycle low, this was a year ago over here, right? This was a year ago, right? So to go to a cycle, from a cycle low to a cycle high, took us a year. It can take us a year to get back to that cycle low. So please keep that in mind. This is not something that can happen tomorrow, or the probability of something like this happening tomorrow is extremely low, right? But over a year, it's possible. So how does this help me then as a trader? Like, what good is this? Am I going to start shorting everything? No. This could be wrong. And maybe we pull back only a portion of the way and then start working our way higher, right? The market may choose a completely other alternate scenario. So this is helpful because it helps me gauge risk in a responsible and repeatable way. That is why it is useful. So I know that if we're at a cycle high and this is the beginning, this could be the beginning of the C wave because initial moves are usually very dramatic. Like this. If this is the beginning of the C wave, then the next few months don't look very optimistic. So if that's true and the market follows that path, I know that I should not be buying right away, or I should not be investing thinking a pullback like this, because a lot of people are going to make this mistake. Let's go back to the daily chart. They're going to, a pullback, right? Finally, the pullback. I've been waiting 2 weeks for this pullback. They're all going to pile in thinking, I just got a great price. I'm a genius, right? Meanwhile, this is the beginning. This could be the beginning of a C wave, which can take this thing back a lot further. So knowing this, I say, well, I know that we're still not out of the clear. Even if this thing tries to rally over the next few days, like I said before, this structure may still be intact. Maybe we still go for the 46K before that C wave takes effect. Now, understand something, that with wave counts, again, they usually begin with some type of news, right? Or something unexpected gets into the system, right? Who knows what that is? Some other kind of announcement, some kind of legal thing, who knows, right? Unless you know the news in advance, there's no way to know. So it can come out of nowhere, is my point. So use this as a guide for risk. In such a location right now, day trades and swing trades make the most sense, because if you're wrong, you take your stop and you're done. Investing in these levels is high risk. It's still high risk. And I'll always say that when we push highs, because I become risk adverse at highs. I want lows, at least cycle lows. And I also would like some macro variables to agree with this. And that's why this entire year, I've been so hesitant to really get involved in this market, because the macro view, meaning the bonds, never really aligned. And if I don't see that, I'm just not going to be very interested, right? That's after all the years I've been in this game, that appears to be the most effective habit. Because here's the thing, I don't mind missing stuff, right? If I miss something, who cares, right? But I don't like getting involved in stuff and watching my money shrink. I've been in that situation way too many times. So I'd rather miss something and eventually catch something else. At least I still have the money to do so. So does that make sense to you guys? So that's really the point of all this, is on the short term, this bullish structure may be intact. Maybe we have one more leg up, right? Maybe test of high, right? If this thing can recover. But if this thing breaks, then that puts us toward the C wave scenario, which cannot, which may not be very good for the next year, right? Or the next 3 to 5 months or something like that. Use this to manage your risk. All right. Don't start getting involved too early. So you see that? That's very possible. All right. So let me look back at the chat here. Let me see what people are saying. All right. So Sean, if we break out in the SPX and NAS weekly with some confirmation, is that time to allocate any non-invested cash long-term? Good question. What do you guys think long-term? So, all right, I just covered Bitcoin. Yeah, we can talk about the S&P and stuff like that, because I saw earlier we made some highs there, which I'm still skeptical. Like I said, I get risk adverse at highs, but we'll pull up the S&P here in a moment. All right, so let me just see what you guys are saying. All right, I'm anticipating a 618 touch. Okay, so I mean, right. So Alex, you see what I'm talking about. The 15K scenario is not something I'm placing a lot of weight on and saying, oh yeah, we're definitely going there, like one of these frauds would tell you, right? I'm just saying, be open to the possibility. We may never get back there. Maybe we only go to 30K. Maybe we only go to 35K. I don't know, right? But understand the risk of where we are and what can happen. And that can help at least be a more effective way to gauge how much money you should be putting into the market, whether you're an investor or whether you're a trader. I myself, I would not invest like at these levels. I think it's ridiculous. I've been thinking that way for a while. But if you want to put smaller amounts of money to work, okay, just understand what can go wrong. That's how this helps you. If you're like, well, 15K is a possibility, you're better off thinking that than thinking, oh, 100K is a possibility. Yeah, I'm going to be a billionaire next year. All right, you're much better off thinking taking the conservative route, especially in these markets. You realize too that when you get a move like this that gives back a ton in just one day, you realize what that confirms is that this is nothing but hot air. I hope you realize that. There's no one in this market. The market was most likely being bid up by certain entities that have a particular agenda at hand, right? That's how this game works. And especially in the Bitcoin world, there's really no laws against collusion. There's no laws against certain forms of manipulation, right? Laws that apply in Forex or in stocks don't apply here. So they can play more games and make it seem real and suck a lot of people in who are going to get stuck. Just like now, imagine all the people that got caught in this expecting to see 60K next week because everyone is calling for that, right? Okay, no problem. Can a star, much appreciated. Okay. Yeah, well, no, I appreciate that. Again, I'm just trying to help you. My goal here is to open your eyes to certain possibilities so that you're better prepared. All right. My belief is that if you have a strong defense, you have a better chance in this game, right? This game is not about being a millionaire tomorrow like everyone likes to claim it to be, everyone driving Lamborghinis. I hope you understand that all of that is fake. I hope you understand that all these traders who claim, these YouTube traders who claim to make money in the markets, I hope you understand that they're lying to you. All right, especially when they're making these ridiculous claims that they're making $1 million in a day or they're making 10K a day and all this other nonsense. They're lying to you. They make money off of your attention, all right, off of their training programs or whatever. That is how it works. So don't be fooled by that. That's my message. And I know it's a very unpopular message. That's why I have no followers. All right, just a few smart people that understand what I'm saying. All right, now, all right, so we clear on Bitcoin. Do you understand that? I want to answer Sean's question here real quick about the S&P. Let me know if you have questions about my wave counts, all right, and understand how I'm using the wave counts, because a lot of people make that mistake where they're trying to find accuracy and they're looking for precision in the wave counts, and then they're looking to place trades on that. Bad idea. You can't do that, right? If the wave count is wrong, what do wave analysts do? They recalibrate the wave count and say, oh, okay, it wasn't this, so it's probably going to be this, right? That's what they do. They relabel, or they give you alternate counts so that they try to account for a few possibilities, right? You don't need to get complex like that. Just understand, are we in a 4? Are we in a 5? And then look at the larger magnitude and be like, where are we on that bigger picture? And that can give you a good gauge of risk, right? So when someone says to you, hey, man, we're just getting started, you could say, we are at a wave 5. We're not getting started, bro. Not at a wave 5. All right. I could see if you're saying a bottom of a 2 going into a 3. If you can, that's very hard to identify, but that at least would be that would make more sense than at a wave 5. All right. Anyway, enough of me rambling and ranting today. I know I'm in some mood, right? Let's take a look at S&P. Now, you guys should always check the bonds in the S&P. Let's take a look at the bonds real quick before I get into the S&P. All right. So bonds. Here's the bonds, the bond market. All right. Now, understand the bonds move very, very slow. And it takes a long time for these things to do anything meaningful. But it's important because, like I've been pointing out, we've been messing around this resistance area. This trend has not exactly changed. We have a nice push here, so rates came off, but that doesn't really mean anything yet. Understand, markets can be irrational, and they don't follow the bond market one-to-one. All we know is rates came off, so pressure came off. Okay, no problem. But if this trend stays intact, and in a few months, we're testing lows again, that means nothing has changed, right? And that means if rates put pressure back on everything, this stock market, the party's not going to be as exciting as it looks right now. Let's just put it that way. Let's take a look at the S&P real quick, right? So SPX USD. This is the CFD of the S&P 500. Looks amazing, right? Looks like it's time to buy. Looks strong. This is usually when Captain Obvious comes into the picture. Well, like I said before, when I see cycle highs or I see highs, I become risk adverse. Let's go. This is the weekly chart, right? So it's pretty impressive where we come over in a few weeks, but we are in an optimistic time of year, right? This is a cyclically optimistic time. Where are we level-wise? I see nothing but trouble, okay? I see resistance levels. So we are fooling around in the vicinity of resistance levels. Now, Sean's question is, should we, here, let's go back to his question real quick. Sean is a longtime member. And if we break out S&P, SPX, and NAS weekly, with some confirmation, is that time to allocate any non-invested money into the long-term portfolio? So based on this location, I would say no, because this is a risky area, right? We are at cycle highs, and there's a lot that can go wrong here, right? We're like in this resistance area. So this would be ideal for day trades, swing trades, thing that ideas that the trade scanner comes up with, because that's short-term oriented. That's what you would be looking at here. Long-term, I think this is high risk, right? Long-term, you at least want to see a pullback. This is a weekly chart, mind you. So you want to see a pullback. Where's our first support? Where's our first relevant support? You notice I'm looking back in time here, right? I'm looking for something that goes back some time, and I'm looking for sort of an average number. An average number meaning it was touched a few times, right? Something like this would be more meaningful. 43.98. What is the high over here? 43.23. I see 43.98. So let's round that to 43.50. Right now we're at 46.17. So that's a few 100-point pullback. That would probably be more appropriate for longer term allocations. So if you want to get involved, first of all, with the way the bonds look, if you're looking for the high growth, not this environment. Something like this would be the typical names, right? The typical movers that follow the market, and you would be just taking small bites, right? Because again, if those rates go back to those low, if the rates go back to the highs, the bond prices go back to the lows, that's going to put pressure on everything. So potential is low here, in my opinion, based on that. Even if we can consistently stay above this resistance, we still haven't taken this one out, right? So we got a ways to go, and the bond market doesn't exactly look like it's cooperating. Does that make sense? So in the NASDAQ too, right? The NASDAQ is just a little bit more exaggerated. Look at that, right? It's a little more exaggerated. I don't trust markets that don't pull back, as we could see with Bitcoin. I mean, look, the daily chart looks nice. Higher low, made the higher high. Great for swing trades. Great for day trades. All right. So those are the points that I wanted to make on those markets. Let me know if you have any questions about that, Sean, if I answered your question fully. I guess what I'm looking for would be a wait to break the high years ago, or wait for a pullback. Yeah, I mean, I think the pullback would be more appropriate. Also, you bring something up that I wanted to mention. In a couple of weeks, probably third week or fourth week, we're in the second week, right, of December now. I'm going to do my next student meeting for students. So Sean, obviously, you have access to that. I'm going to go over something I got requests in my previous meeting about doing using the TradingView scanner, the TradingView screener, to find these cheap high potential stocks that you can start maybe accumulating. So I was doing some homework on that, and I'm going to put together a student meeting where we go over that, right? How to find these potential high growth stocks, which are also high risk, and maybe you can basically do your own legwork and find a few names that you may have otherwise not have found for when rates become more attractive. Okay. So that's available to students or people that are active investors, and people that are not active investors, like if you just have a regular membership, then you can see the replay of that, okay, rather than participating in the actual session. But Sean, you're an active investor, so you can, you get the link for the invite. Anyway, okay, so over here on TradingView, it's great to hear reality when the entire 100K, right, exactly, RK. It's mind-boggling that people believe it, but you have to understand this whole game just operates on hype and perception. Everything is fake. I mean, I just saw a video about Google. They faked their AI thing. They basically exaggerated some of their new AI features, and it was, I mean, Google is faking stuff. Man, we're in trouble if Google has to fake stuff. I just saw a video about that. Anyway, okay, so let me just point out one more thing here before I wrap this up, and I appreciate you guys sticking around. I usually make these streams shorter, but I talk too much. So I want to talk about real quick Polygon, okay, Matic, USD. Now, the trade scanner called this long. Is this thing out of its mind? Let's see what's going on here. This was called the trade of the week. Now, obviously, this was before the Bitcoin move, obviously, right? So let's go to the 4-hour chart and let's see what the trade scanner could have been looking at here. And can we pick out, can we basically beat the trade scanner? Can we pick out, can we see the context that the trade scanner can't see? I mean, that call was made here, I believe, right? If anyone has access, Sean, do you have that, or someone want to share it in the channel here, the actual call from the channel? Google never lie to us. Of course not. They're honest. They're a very honest and transparent company. So someone pull up that Matic trade, Alex or whoever has access to it in the channel? Because, by the way, if you join the free Discord community, there's a Trade of the Week channel. So if you're not on the email list, you don't want the emails, you can go to the channel in the Discord community, and you can see the Trade of the Week there. It comes out there as well. You could thank Stian for that. So if someone wants to put the trade idea, I want to show it here on the screen so that we can analyze it. Because what I want with the trade scanner, I want you guys to be able to do a little of your own homework, which isn't hard. You don't have to have 20 years of experience to see what I'm about to explain to you. Okay? Anyone have that trade idea? Can anyone just pull it out real quick and just paste it in the channel here? Because I believe it was this candle, okay, where Matic was called long. So if that was the candle and it was called long, like right there, right? Now, you have to consider a couple of things here. First, you're looking at the polygon chart itself, which is generally bullish, right? So that makes sense. Okay. At that moment, that makes sense. Let's say this is what it looks like at the moment, right? You don't see those red candles. Oh, you can't see it? Ah, okay. Maybe you could type it in some other way. Yeah, it blocked you, I guess. That's strange. Yeah, because YouTube has like filters and stuff. Maybe you need to change some of the text in it to fool it. I don't know. All right. Well, thanks for trying. Can you at least give me the price, the entry price? Because I believe it was this candle. So what I want to say is, at the time of the trade, if you get that trade, and you're like, oh, cool, Matic, and you pull up the 4-hour chart, you should start with a 4-hour, possibly a daily chart. But it's good to start with the smaller time frame first. Okay. You should have it. I mean, the Matic trade should be in there, though. It should be in the Trade of the Week channel. This is not a bad location for the long. Okay. There you go. 87.50. Thank you, Sean. 87.50. So let's. I just want to put that on the chart here real quick, right? Let's put 87.50 on the chart. All right. So this is 87.60, whatever. I was close. So here, let's just put 87. What was exactly? 87.50 exactly. Okay. So here's where it called Matic long, right there. And you're like, man, that sucked. Well, so here's a couple of things. At the time, so it's probably going to get stopped out. Okay. Looking like this. But let's talk about what it looked like at the time. It's important to see this. So that's what it looked like at the time of the call. And you're like, oh, I'm going to take that long. Great. Okay, cool. Right. And then it does this. Now, understand a couple of things. The level made sense. It was coming off of that support, right? Old resistance back here, new supportive area. Okay, no problem. But Bitcoin, you have to look at Bitcoin, right? And if Bitcoin is having a hard time, chances are this is going to have a hard time too. So that's the key thing here. Let's see what was Bitcoin looking like at the same time. So let's just take a look at that, right? So here's Bitcoin, and around the same time, we had this giant. This is a pin bar, but this is not a hammer because the open to the close is too long. But you say, oh, look at that long tail, right? Blah blah blah. Look at the hammer after it. This is an inside bar. So that you might get fooled into that, right? It's very possible that this trade you may have not been able to avoid that long, and then if the bearish momentum follows through, you get stopped out. I don't really see how this could have helped, unless you look at it this way. This candle, right? It's a very bearish candle, and usually inside bars that come along after the mother bar, we call this the mother bar. they're usually trend continuation patterns or momentum continuation patterns, right? The momentum is bearish. The trend isn't bearish, but the momentum is bearish. So if you take out the lows of those inside bars, you're likely to go lower. That may have helped you take an earlier stop on Matic, right? You're like, okay, I see the inside bars, take out the low, out, right? Take the stop sooner. So in that situation, it wasn't like Matic was being called at a high at like a resistance. It was being called off of a support. So in a number of ways, you may have taken that trade, but the risk could have been mitigated by watching those inside bars on Bitcoin, and you take the loss sooner. That's really the best you could do on something like that. I don't think the trade could have been avoidable completely. Again, we're trying to look at this as honestly as possible, because after the fact, it's easy to see everything, right? But my point is, with the trade scanner, there are times when you can pick out trades that are obviously high risk. You know, like if it was calling along up here somewhere, you'd be like, why would you want to go long near a resistance like that? And I've explained what to do in those situations. Usually you want to take a smaller position or just avoid it completely because it's at a less than ideal location. This location was pretty much ideal, okay? That location, it called the long up here, coming off of an ideal location, that wasn't bad. So that trade was a lot harder to avoid. Does that make sense? Now, the trade scanner, if you look back at its track record, which again, the links are in the description. Good, I'm glad you were able to avoid that. Thanks, Sean, for those numbers. The trade scanner has been doing pretty well with the coins because the general momentum in recent weeks has been bullish, right? So when you see something like that, or the trend has been intact and the momentum is followed through, it calls a lot of good trades, right? When you're dealing with the trade scanner, you don't take all the trades. A lot of them are based on the same idea because it's the same system. So if you see Bitcoin, Litecoin, Ethereum, XRP, Matic, all called long, you don't take all, you take one. Because if one stops out, they're all going to stop out, right? I repeat that a lot. It's important to understand. Same with like these Forex pairs. A bunch of them got stopped out, right? Like the pound dollar, hold on, GPBUSD, right? This thing was called long, and this thing stopped out. Now the pound is generally a bullish trend overall, but this recent momentum is getting confusing, right? So we keep messing around this double bottom situation. We had a bunch of economic news recently, right? This week, the Bank of England is going to have their rate announcement. So it's setting up for another long again. I wouldn't be surprised if the trade scanner comes out with another pound long, right? So if you get that, understand the location isn't bad. Just realize you're going into some pretty heavy economic news, right? So that can have a random effect on things. Does that make sense, you guys? Okay, so those are the things I wanted to cover, right? Any questions about like this Bitcoin analysis that I've done here? Any question about the wave counts? Do you guys understand my point? So now you guys are not overlooking the wave count because I just showed it to you, right? A lot of people are going to make that mistake. They're going to overlook this whole thing that I just described. Okay, what do you think about a short on SMR? All right, a short right now. Okay, SMR. I could take a look at that real quick. All right, man, I'm talking a lot today. I should have wrapped this up a while ago. But all right, hold on. SMR. By the way, if you like my content, do me a favor. Press the like button. Press the subscribe button. It helps the channel. I know Alice has been helping me clip a lot of my older clips, and we've been putting those out. I don't get many views, but I am planning to do a lot more with the channel once we get some other things out of the way, right? So do me a favor, press the like button, press the boost button over on TradingView, and that helps out a lot. Thank you. I see what you're talking about here, Alex. That makes sense. You have the pin bar. Yes, that's a sell signal. That's a swing trade sell signal. That's a nice signal. New scale power. Yeah, look at that. Nice location, resistance, right? Everything is lined up there. This trend is clearly bearish. How much is that thing? $3. That's no wonder why I was going to know how come the trade scanner hasn't picked this one up. All right, this thing right now is at $3.08. The trade scanner doesn't short stocks that are less than $5, right? But if you're only looking for a small bite, maybe you get 50 cents out of that or something. I mean, the setup is there. That's a nice look. That's for sure. All right, how far that goes? I mean, what's the low here? $1.98. So I mean, you can sort of measure your potential that way. Does that make sense? Nice call. That you should share that one in the community channel. Let people know. That's certainly the look. Okay. Just would have been nice if it was a higher price stock, like a $20 stock, a $50 stock, something with a little more potential. But the look is there. So like I said, an expectation, maybe 50 cents would be like a home run on something like that. Maybe $1 if you can get that, if this thing really gets hammered. And that's the thing is the stock market is making new highs and that thing is sucking like that. That's relative weakness. So you have that in your favor as well. All right, you guys. So I don't have any other questions. Again, thank you for taking the time to be with me here today. Make sure you check the links in the description. Join the free Discord community. And again, if you want to get access to the trade scanner for 50% off your first month only, there's a link in the YouTube description. Just click on that. It'll take you to the page that has the coupon code, and you can sign up for that. Just remember, the second month, it's going to go back to your regular price. You can cancel at any time. Okay, it's not like the quarterly or yearly contract where you're buying the year up front. It's not like that. You're buying the month, okay, just for a month, and you're getting half off your first month, right? 50% savings. All right, just wanted to mention that. Links are in the description. Again, I want to thank you all for taking the time with me here today. You know where to find me. If you have any questions, you could send me an email. You could send me a private message in the community. I don't private you message first. So if you get a message from me first, it's a scammer. Most likely. A lot of impersonation nonsense going on these days. So please keep that in mind. All right. So again, everyone, enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.